Hello, Detroit. You are watching Beauty in the D live streaming on Facebook, YouTube, Twitter, and other top social media platforms. Please remember to like, follow, share, comment, and subscribe. And thank you for watching Wjzz Cool TV, the coolest station in the world. Thank you again for tuning in to Beauty in the D. I want to first give a shout out to our sponsors. I want to give a shout out to Mina Martinez, who handles all of my social media marketing. I want to give a shout out to Giovanni McCall, also known as G, the short hair slayer, who keeps me fly. And last but not least, London Consulting and Insurance Firm, who sponsors and powers this show. So, of course, this week I'm not going to disappoint, as I never do. I have an awesome, fabulous guest. And I want to give a quick shout out to you, Lisa Davis. Thank you for being here.
Thank you for inviting me.
Yeah, so I want to read your bio real quick so our audience can get a background of who you are and what it is that you do. So I have Lisa Davis here, who's also known as the Trusted Banker. She is a financial coach and speaker. The visionary financier powering multi-million-dollar initiatives and a mastermind behind the transformative financial fitness 90-day challenge. As an illustrious banking powerhouse, Lisa has spent 2 decades shaping a prosperous career that has catalyzed over $100 million in small business loans, which she just told me on the sidebar that it could be more than that. The pioneer creator of the Bankable Academy, can't wait to learn more about that. Lisa is passionately committed to a noble mission, empowering 1 million individuals to attain bankability and unlock their financial potential. Lisa is shattering the myth behind credit scores that have misguided our nation for decades. In Lisa's words, credit scores don't matter. It's your credit profile that's keeping you from your dream home and business loan. So what? Get it together. So we're going to talk about who Lisa works with. She works with individuals grappling with low income to high profile millionaire celebrities, and from budding entrepreneurs to established business magnates. Lisa's expert guidance transcends economic boundaries. Her financial acumen and passion to foster financial health universally allows her to cater to a diverse clientele, empowering each of them with their own unique journey towards financial freedom and bankability. What can you expect from Ms. Davis, you ask? High energy, fun, and a no-nonsense approach designed for enhancing your financial fitness and credit profile that reveals the path toward bankability regardless of your current economic status. So again, welcome, happy Saturday, and thank you for stopping by.
Thank you for inviting me. I'm excited to be here.
Yes. So before we even get into, because I want to talk about being bankable and the Bankable Academy, you said here, it was $100 million in small business loans. What do you think that number represents right now?
Probably. Well, now that I'm out on my own, maybe 110 million. I'm not sure.
Just an extra 10 million. Okay.
Yeah. So as a banker, I did a lot of lending for small businesses, for developers, for commercial, and so I put all that under my hat because I was leading those loans when I was at the bank, and so I just keep talking.
You
about
were leading those loans.
Absolutely.
Okay.
Yep.
So let's talk about that. How long were you in the banking world, corporate, before you even stepped out to this crazy world of entrepreneurship?
So I started banking in 1998 as a church lender. Actually, I was a lender for churches. That was a little bit difficult to do, but church lending was big back then. And then I transferred over into residential lending, and then got into the bank, like Flagstaff was the first bank I started working at in 2002. Then I worked for Fifth Third. I worked for other banks that are now merged into Huntington Bank. And so the last type of work that I did at the bank was internal and operations. It was like community reinvestment. So my entire job was to reinvest into communities.
Yes.
Put money in, fund organizations, fund nonprofits, work with different cities to increase small businesses, to increase workforce development, to increase affordable housing, to stabilize communities, to teach financial literacy. So all of those things that we hope build up communities that banks have to the work. You know, if you see banks in your neighborhood, these are the things that they're charged with. They're supposed to support these communities.
Yes, they are.
So that's the work that I did. And so it was a very fulfilling job. I really love it. And so now that I'm out on my own, I think I left in 2016, moved to Costa Rica for a bit, and then moved back. Moved back in 2021.
Okay.
And then I worked at another bank. The bank brought me back here, and then I think I left them last year. So now I'm on my working with my consulting company, only a social media company now as well. So.
I have so many questions for you. Oh my God. I'm taking notes while you're talking because you are fabulous.
Oh, thank you.
So before I even get to what I really want to talk about, I got to ask you, how long were you in Costa Rica?
So it's funny because I sold everything, and what I didn't sell, I put in storage, and me and my dog moved to Costa Rica, had been there a little earlier that year, didn't know much about it, and as soon as 3 days in, a bank recruited me. They interviewed me on the phone, and I told them I had moved to Costa Rica, and they were like, "That's okay, we want to hire you." So they sent all the computers, they sent all my work, everything to Costa Rica.
You were working remote for the U.S. in Costa Rica.
Yeah, but the plan was to leave. For 12 months, I was going to visit 3 different countries to figure out where I wanted to move to. I was going to be an expat. And so Costa Rica was the first.
You and your dog.
Me and my dog. Costa Rica was the first country, but you can stay there for 90 days without a visa.
Okay.
So you can stay there for 90 days. So I did the 90 days because I had already paid for everything.
Mm-hmm.
And then I was going to go to another country. I talked to some folks in Puerto Rico. I was going to go there.
Uh-huh.
But I had to come back because I had took the position with the bank. So I came back.
So where did you stay for those 90 days? Were you in an Airbnb? Did you rent a place?
Yeah, I stayed in an Airbnb, but I didn't stay in major city. I stayed in a very small village. When I say small, no post office, no beauty shop, no stores. There was a pizzeria and maybe a yoga studio.
What was that like, that experience? And it was just you and the dog, right? I just want to be clear. Okay, so it probably was a mental break, I bet.
It was a mental break. It was a mental break. It was during COVID, and they had real strict COVID policy. But Costa Rica is beautiful. The people are beautiful. I was in an Airbnb off the ocean, so I have to be at the water. So, and the dogs run free there. So my dog learned how to be a Costa Rican dog for that time. So it was
experience for the dog too.
All over the beach, yeah. And I met the entire community over there because it's a small village. I actually just went back, and my friend just texted me just now. Amiga, she's like, "Where are you?" I just went back to visit, so I met the whole community because it was a small village.
And how did they receive you being an African American woman?
So they loved me. They thought I was a Costa Rican. They called me Tika.
Yeah, because I can say that.
They wanted to know where I was from. So a lot of people would approach me talking Spanish, and they call women Tika there. So, but I'm like, no, hablo Espanol. I don't really speak it that well. But it received me very well. They didn't understand a lot of the things that go on in America as far as the racism.
They don't?
With the lighter skinned people versus the browner skinned people. But yeah, they received me very well. I still have friends there to this day. So.
Yeah. It's nothing like that. I had an experience. I was 17. I lived in Pascuero, Michoacan as a foreign exchange student for a semester. And it was the same thing. It was a small town feel. But again, I was 17. So I can only imagine. I didn't have any stresses to decompose or anything. You know what I mean? At the age that I am now, it was just about the experience. Yeah. So that is awesome.
Yeah, it was really great.
Very well versed.
So I mean, when they brought me food, by the time I was leaving, the grandmamas are cooking me food, Mama Soda cooking me food.
The abuela.
Yeah, so everybody, I'm coming over for coffee and tea or coffee and cake. Yeah. So they're very hospitable and they're really, really loving people. Okay. And if they like you, they like you. And if they don't, they don't. Yeah, so, that was great.
That's cool. So I want to go back when you said that you had started with doing church loans, right? Now, I don't know if you're aware, but there's some issues right now with these churches just being insured. Like a lot of insurance companies are dropping them or they are just charging out the roof on that. Was it similar to that with getting them loans?
Loans were hard. I think they may still be a little hard. Loans are hard because churches don't have a real set method of income. It's all donations. Yeah. So back in the day when we were doing church loans, we would have the deacons of the church would be the trustees of the church would be on the loan. they would be the ones that would co-sign onto the loan, because there's no way that you can guarantee that you're getting enough
Donations.
tithes or donations.
Yeah.
So somebody has to be responsible for this loan. So yeah,
Gotcha.
it was difficult. I don't even think I ever closed one, but I sure did work on them a
Really?
long time. Yes.
So that's creative financing at its best.
Absolutely.
I never even thought about that. You know what I mean? With the churches, because they needed to expand and to make improvements on the church, especially these older churches. I had insured a few. That's how I know about. It's hard with them getting insured. So
That's why we try to tell churches to create a source of income, which you see a lot of faith-based community development organizations now that may do housing or they may have programming.
Yeah.
If they create a program and that's an arm of the church, maybe daycare, right?
yes.
Child care centers, even some of them do, they work in the communities where they help with people buy houses or learn how to be a homeowner and things like that. So those things help to bring in monies to the church. Any kind of program they can find where they can have income coming in, those are the types of things that can help a church with loans.
That's good information. So then you transition from doing the church loans over to residential. So you were working with home buyers. Were these seasoned home buyers, refinance, first-time home buyers, or all of the above?
Back in the day, it was everybody I could talk to. So,
Okay.
Residential lending, I started with a broker, and then I went into the banks. So it was all homeowners, but I worked a lot with realtors. So I have I really built up a strong relationships with realtors, and they really liked the way that I did my lending. I was receptive, I was responsive. So if they text me or call me, I keep them up to date on what's going on. I keep the people up to date on what's going on. If they could qualify, great. If they couldn't, I would give them 6 weeks,
Upfront,
6-month plan. Yeah, I didn't play around. I could do like
I
20
could tell.
to 30 something pre-approvals in a day. So I was always getting them, So
Oh yeah, realtors love you.
Absolutely, they did. They didn't like when I left. Yeah,
Yes.
so it was good. It was fun time. A lot of money to be made, but then the mortgage meltdown happened.
Yeah.
So I transferred to different states at that time, working with different brokers.
You transfer out of state?
I got Florida license,
Okay.
New York license, Virginia license, Texas license, California license,
Dang, girl.
Illinois. That was when they first started all that licensing too, the NMLS system and all that. And so Michigan had kind of, the values had gone down, so I went with a broker that was in like 40 different states. And so yeah,
Okay.
I got licensed in multiple states and was working there.
Okay.
And then I became a wholesale lender, and I was collecting mortgage loans from my Florida brokers.
Okay.
So Florida became my territory. So yeah, I've done quite a bit.
So you know your stuff.
Yeah.
So I want to go into a couple of these topics, decoding bankability beyond credit scores. Can you talk about what the concept of bankability means for
So-
those who don't know?
I can, because when I first started doing residential mortgages, I was saying 10 toes down and say we did not have credit scores on the credit report. So they came out a little typewriter machine. When I first got into mortgage lending, credit reports did not have credit scores.
Really? It just had a history of how you pay your bills.
It just had a history of how you pay your bills, and we learned how to pre-approve people based on their bankability, based on if they paid their bills, if they didn't, what happened, and did they come back from that? Did they, bounce back from that? Did they have a good reason? Did they have compensating factors? All these things. So learning how to pre-approve without a credit score, and then credit scores come into the market 5 years later.
What year was that when they came into the market?
I would say credit scores were really prevalent. When did I go to Flagstar? So I would say maybe 2000. Because
And why do you think that is?
Maybe 2002. Because at that time, the subprime market hit real hard. So the subprime market was really a moneymaker. And we had maybe 300 subprime brokers that we could shop loans to. And in order to be competitive, the brokers would have things like they got a 580 to a 600, 600 to a 620, 620 to a 640.
That determined
it would
the
be
interest
different
rate.
rates and different how much they had to put down. It would determine different factors on how to get them approved. And that's when I really remember credit scores coming into the industry, when we had credit score driven loan products. And then you had all of a sudden the no income, no asset, you had different factors in the subprime market. So if you wanted to do a no income or no interest, then that's where the 700 score would be important. but they weren't really going in on the credit so hard as it was maybe with the score, because I remember back in the day doing maybe veterans, we could get them approved with a 400 if they had, because they had that certificate of eligibility. So scores really drove the subprime market, but conventional loans always had to be reviewed based on credit, how you pay your bills, reserves, and things like that.
Okay. So just in your own opinion, your own preference, did you like post credit scores or prior to?
I think the messaging is what really aggravates me, because credit scores have now become a moneymaker. And I see my people, because it's a $2 billion industry now and it didn't even exist 20 years ago. And I see my people spending $30 a month to $120 a month on credit repair, and credit repair is moving the conversation around from what actual credit is about, what actually paying your bills and being responsible and not borrowing more than you can afford. We've moved away from those basic conversations, and we talk about credit score, and people come to me and say, well, I got a 780, can I get approved? A 780 can get denied all day. That doesn't mean you're going to get approved. And a 780 probably will get denied all day, because since you're focused on it, I pretty much know you don't got a good credit. You just got a good score.
And not a good history. We have to do our quick station ID. Thank you. You are watching Beauty and the D live, streaming on Facebook, YouTube, and Twitter, as well as other social media platforms. So please remember to like, follow, share, comment, and subscribe. And thank you for watching Wjzz Cool TV, the coolest station in the world. So I gotta ask you this: the credit repair, is that a ripoff?
I believe so. Oh, you know you didn't do that. Yes, I believe so. I absolutely believe it is. Because credit repair says that when you say the word repair, that's like how you repair a car or you repair a computer.
Go ahead and fix you up.
It's in real time right today. Something broke, let me fix it. You cannot fix your past payment history. So whatever you did in the past, you can't fix it.
So there's no thing as erasing it or removing it, because...
No, you cannot remove. You can remove it so you can't see it, but we'll always see it.
Oh.
There's never a time the bank won't see everything you've done for the entire longevity of your life. They will see things for the entire time you've had credit. Your credit footprint never disappears from the underwriter, because that's their job. They get paid to know everything you've done, just like insurance underwriters.
Yes, I'm the same with your motor vehicle report. No, I had no tickets and accidents.
Yeah, okay.
Really?
Exactly.
So this right here, it goes right with our next topic, the underwriting mystery. So like you said, your footprint is there. Let's talk about demystifying homeownership loans.
So homeownership loans are not hard to get. A lot of people are afraid to try because they think they'll get denied. And honestly, in the credit world, in the underwriting world, in the mortgage world, there is no permanent denial. It's only a delay, because there's something just not quite right. Right? If you have a good conversation with your lender and you have a good relationship with them, and they can explain to you what it was, then you can go fix that. You can say, okay, they said I was late on a bill in January. Well, if you're late on a bill in January, don't apply till next February. Don't apply in May, because you will get denied, because we can't see a 30-day late or more. We can't see that you were late on paying your bills within 12 months. But people don't know that, and they'll be late in January and go try to buy a house in August. Buy the house next February. We need a good 12-month clean history.
12-month clean history.
12 or 24, depending on how much credit you have, or how much credit you have, how strong your credit is.
So what if you pay it off? Like, say it's still...
Because credit is the history of paying. So we have I've talked to a lot of people that go delinquent, something to go to collection, they're like, I'm gonna just pay it off. It's better for you to make 12 to 24 months of strong payment history on time versus having something go very delinquent and then pay it off, because I don't know that you're going to pay me back my mortgage. You might let it go very, 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 very delinquent and then hope that you hit a windfall of money so you can catch it up. Credit is about your integrity and making payments. And so
keyword integrity.
Integrity. It's very integrous. It's about your character. So if I can't tell you're going to make payments, then I can't lend you money. And being lackadaisical or slow or letting things default and then say I'll catch it up when I feel like it is not the type of person I want to lend money to. So getting approved, underwriting approval is based on risk, and you show
Yes.
that you're a bad risk if you don't pay things on time. So if you fall behind, don't wait till you can catch it up and pay it off. Start catching it up and pay on it every single month on time for a year or two. That will build your credit history back up, and that'll show that you're a strong, a better risk. You've learned from whatever happened.
And you corrected it.
Yeah, because the interview is part of your application too. The interview is an integral part of the credit application. That's when we verify all information, which is why people don't need to pay for credit repair, because your address, your date of birth, the way they spell your name is not credit. So stop paying for credit repair to get all those addresses removed. Credit and addresses don't go together. We will confirm what the address is during the interview process. We confirm all that information. How do you spell your name? What is your date of birth? Your social security number? Your addresses. But we also confirm if you've been late, what happened. Some people have been in the hospital. Some people lost a job. Some people lost a spouse. Those things make sense. Credit is forever forgiving. It was set up to be forgiving. It's not like a hard stop. It's not like you have to be perfect to have good credit, because we know life happens.
And it does.
It does.
Yeah.
So we know things are going to happen, and credit, it knows that you might have a blip here and you can fix it and move on. But you're never going to have, well, I say you're never going to have a perfect credit history, because life is not perfect.
Right.
So.
Yep. Good point. You have educated me so much, and we haven't even gotten to where I really want to go with this.
Oh, goodness.
So, we talked about how you started with the church loans, and we've talked about obviously your background, and then you went into doing residential loans. How and when did you decide to step out on faith and become an entrepreneur? And I'm speaking from experience, it takes a special person to step out there and just, be your own boss.
Well, first of all, I never liked having a job. I didn't have a job until I went to the bank. I was a nail tech.
You had a career.
I was a nail tech, so I was self-employed. Self-employment runs in my family.
Okay.
All my aunts and uncles had their own business. My dad had his own business. So I got into corporate, I think, in 2010, and I left in 2016. So a good 6-year run was good for me. So I don't have a fear. I am used to eating what I kill. I don't have a fear of not having a job. So when I left because the bank I was working for was acquired, and so my position was eliminated. Because when you're in leadership, there's one person at each bank, and the acquiring bank, they'll keep their person in that same role and get rid of the other person. So I was like the director of my department, so the director of the same department in the acquiring bank came in, and so they keep that job because they're the acquiring bank.
Right.
And so I left. I was I got bought out or whatever. So
Okay.
yeah. So that was no big deal. I was ready.
Got you. So that was like, okay, it was like a push. Like, you know what? Let me do this. So then you came up with the concept to, how did we get the title Trusted Banker?
Oh my goodness. Because while I was a banker, my realtors trusted me a lot. Me and my realtors, we all had a great relationship. They really trusted what I did. Like, they trust me so much. My realtors didn't call and bug me because they knew I was on the job. Yes. And if they had a question, of course, I would answer right away. And then also my colleagues, my peers, people would always ask me, because I'm an innovative, outside the box thinker, problem solver, and I create programming very well. And so people always call and ask me for their advice, or ask me, how would you do this, or what do you think about that? And so I was like, well, people trust me in this industry, and I believe that Black people need to understand that they can trust the banking industry. So I want to build that trust back for Black folks, because we need to trust the financial industry, because that's how we build generational wealth.
Yes.
This is where those monies are. It was created to help you build wealth. It wasn't created to take your home. But we still have people believe if they don't pay their bills, they will get put in jail, or somebody will come and snatch up their stuff. And we don't want their stuff, and we don't want to put you in jail.
Right.
And so I use that name to try to dispel the myth that you can't trust the bank. That bankers are here. They are somebody you can trust. You can trust the products and services. You got to educate yourself.
Yep.
You have to understand the conversation, understand the language, the acronyms. But so that's why I came up with that name.
Okay. Love it. And so you started the company what year?
2017. Oh, I started the company. So I have 3 companies. I'm sorry. So the Trusted Banker is my social media persona company, and I started that one. I think there was an Equifax or Experian breach, and everybody started calling me. I had already left the bank, but somebody got hacked, Equifax or Experian, in 2017. And a lot of people were calling me, what do I do? People had anxiety, people were crying, people were scared they were going to lose their identity, people were scared of being frauded, and all these people were calling. I was like, okay, I can't answer all y'all, but I'll go on live Facebook. So I went live on Facebook and answered all these questions.
And it was 2017.
It was 2017, and then I got more questions and more questions. So I started doing more lives and more lives, and that's how I came up with the Trusted Banker too, because that was another part. Because friends and colleagues trusted me, friends and family trusted me too. So I said, okay, so we'll just start the Trusted Banker online, and so that's how that kind of originated online. But also I have my consulting company and I have a nonprofit.
Okay.
So
so the consulting company, is that the company that you do the financial literacy through?
I do free financial literacy tips and tidbits all on social media. All on social media.
Okay.
That's why I started.
Free.
Yeah, free, because I give good advice on social media, because I realize a lot of young people are on social media, and I always want to reach the young people, because our young people are making money. Our young people are fearless. They're starting businesses. They're getting involved in a lot of things, and so I wanted to get the real information out there for them, and I knew they were on social media, so that's why I kept the Trusted Banker going, and I branched out to YouTube, Instagram, Facebook, and somewhere else I can't remember. TikTok. Oh my goodness.
Oh, okay.
And TikTok. And
There's a lot of young people on TikTok.
Mm-hmm.
Yeah. Okay. And so you give them these tidbits. Now let's talk about the business loans that you're doing. The business loans that you're doing right now, you're working with the CDFIs.
Yes. So they are my client. They do the loans. I am finding the loans, sussing them out, and then helping people understand why they need a loan. The initiative or the programming that I'm doing right now is called Fearless Financing, because people are afraid to take out a loan to scale their business.
I like it.
I've done several classes now, and now we're doing Fearless Financing Fridays. So we meet every Friday to talk to the business owners and find out. Yesterday was the first one, and it was a great first day.
Where do you guys meet at? Is this on virtual or in person?
It's in person. It's at Incabizo in Ferndale. Now, the company that has hired me, my client that's doing the loans are only for Oakland County. So Seed Lending is my client. Seed Lending with Great Lake Women Business Council.
I'm familiar with them.
So they have $4 million to lend in Oakland County. And so it's been hard for them to get it out. So these is ARPA funds that needed to get out all this year. They've had to extend it. So I got the call earlier this year. They asked to bring me on if I could go suss out loans in Oakland County. And so in doing that, I've just been learning that people are afraid or not understanding when they're supposed to take out this loan and stop bootstrapping. So just this week I launched Fearless Financing Fridays, because we've done Fearless Financing workshops. And we're also going to be launching a new initiative called Momentum that's going to help businesses understand when they're ready and scale, so that we can finance that whatever it is you need. If it's a business marketing strategy, operations, cash flow, whatever it is, we're going to look at financing it. So it's the same thing, but talking about it differently. My experience on social media has taught me that people need to hear it differently. People understand it a little bit differently, and people have a fear still of financing, and they don't understand when they need it until they can't pay a bill, and then that's when they run to the bank, and that's when it's too late.
Yes, you are so absolutely right about that. Now, Seed, is that affiliated with Michigan Women Moving Forward?
Great Lakes Women Business Council.
Oh, Great Lakes Women Business Council. Okay.
Yeah.
When I first moved back from Atlanta and I brought the business here, my main thing was I need to have a place to work. So I had got a place sight unseen. I had my girlfriend go check it out. She said it was cool. She FaceTimed me, sent me some pictures, like, okay. I was like, okay, pay the money. And it was in Oakland County. It was in Southfield. It was just like a co-working space, kind of, sort of. And some kind of way while I was there, I learned about Seed. I never moved forward or did anything, but I know that they're there and it's real. So, but me at the time, I was bootstrapping it still. You thinking like a hustler, I guess that's the best way I could say. Like, oh, this month will be better. I'll get up this month out, and you're right.
Detroit hustle harder.
We do.
Okay. But I'm trying to get folks to understand, and when you understand, it's got to be a career. This is permanent. A hustle is temporary.
Exactly.
Okay, and so we understand that we are creative beings naturally. We know how to figure stuff out. We know how to create things, invent things. We're going to put a twist on it.
A twist, yeah,
but
we will.
When you see it's making money, this is when you need to leverage somebody else's money to make sure you can make 3 times that money. So if you're making $15,000 this year, you need to make $70,000. You need to leverage somebody else's money and not bootstrap it, because you're taking money out your refrigerator, you're taking money off your utility bill.
And we think we're supposed to. I did. I thought, I did.
No. No,
but I got hooked up with a CDFI, Detroit Development Fund, they did just what you said. They went off of how I paid my bills, and at that very moment I wasn't ready, so they put me in a program. I can't even think of the name of the program right now to come to me, but they put me in a program. Listen, I was operating my business without even having a marketing plan. Okay, I'm not ashamed to say it. Okay, it's my testimony, and without even having a marketing plan. So they put me in this program. We put together a marketing plan, and they made me, what you just said, bankable. And so maybe at first it was a little intimidating or whatever, but they got me there. And, then I end up, eventually was able to go to a real bank. I mean, a traditional bank, and
that is we always like to base it when we say starter home, middle home, final home, is micro loan, CDFI loan, bank loan.
Yes.
Right? And so the other thing I always like to tell people is, I know we hate the word Trump. I don't like the word Trump. But the one thing we can learn from Trump, that man, they never used his money. Right. And that man took out a loan every single year, fraudulent or not, whether it was real or not, he took out a loan. So when you get into business, your mindset needs to be every 2 to 3 years you need a business loan. So don't worry about the payment or paying off the first loan, because you're going to keep leveraging if you plan to be sustainable or grow. Now, if you only want to make the same amount of money every single year, you're not my customer anyways. But if you want to be my customer, we're going to build you up 100,000, 300,000, a million, 1.5, 10 million, right? You got to keep going if that's why you got into business. And the only way you can do that is to understand every 2 to 3 years, I'm going to need to leverage somebody else's money, because I'm not going to keep taking this out my house.
So that forces you basically to be in the mindset of growing, of becoming successful, because that next loan, maybe you're leasing where you are now, maybe that next loan will help you to purchase something and just take your business to the next level.
Absolutely. We call it wealth mindset.
Wealth mindset. Great on all of these terms today. Write that down.
The wealth mindset is all about ownership and opportunities. So when you have a wealth mindset, you understand that the way to make money is through ownership, right? And when you understand ownership, then you understand how to find opportunities. And those opportunities are supposed to not have your money going into them. You leverage other money in order to finance those opportunities
and keep growing. Yes. So how does the CRA, the Community Reinvestment Act, tie into CDFIs, if at all?
Oh, banks fund CDFIs. How does CDFIs are community development financial institutions. So they were created because bank lending sometimes is a little difficult to qualify for. Community development financial institutions can qualify you with less aggressive ways, or like they did put you in a program to get you ready. They didn't just kick you out the door. So it's the help, and it's the smaller loans too. They don't go as high as bank loans. But if you need like a $5,000 loan or a $10,000 loan or 20, it's easier. The thought process was, as a CRA officer, when I was a CRA officer, if I put $1 million into a CDFI, that's funding them with capital that they can lend in communities. So when people ask why Chase isn't lending directly, because they funded a lot in Detroit Development Fund. They've put multi-million dollars in Detroit Development Fund. When you don't see Bank of America definitely lending directly, they've put a lot of money into other type of institutions that are lending directly. So sometimes the bank can't also do those loans because they're doing other things or whatever. So they put monies into CDFIs, and CDFIs are there to help you get those. And technically
that's our obligation, right?
Oh yeah, that's definitely their obligation to make sure that they're lending at less aggressive criteria so that it's accessible for those people in the community. And it helps to develop the community. The thought is you create an economy in the communities you serve by making sure there's stable housing, businesses are stable, jobs are created, CDFIs, when they lend to small businesses and small businesses make jobs and they employ people, that's
right.
creating a small economy. So, or if they're lending to help you buy a house that you can't qualify for at the bank, we've got mortgage CDFI, small business
Oh,
CDFI.
I didn't know that. Can you talk about that for a minute? Mortgage CDFIs, and how do people find that?
Christine Cody, hey. Opportunity Resource Fund. So that's the one we have here.
Opportunity Resource Fund?
Opportunity Resource Fund is a CDFI that does mortgage lending. And they do mortgage lending throughout the entire state of Michigan. And they are really good because their criteria is probably, I haven't worked with them in a long time, but we've worked together for a long time, but I haven't had anybody use their product recently. But if I know what I know, their criteria is probably not as stringent as trying to go to a bank and get a mortgage.
Really?
Correct.
Okay, is the interest rate like moderate? Is based off how you pay your bit, like how the program I went through.
So I'm not sure what the rate is because it's not regulated like a bank rate,
Right?
But it's also not like a broker rate.
Gotcha.
But it'll solve an issue like maybe if you need to do a small dollar mortgage. Maybe I'm not even sure if we need them right now, but maybe if you need to do a small dollar mortgage, if you want to look up what she does, because again I haven't used her recently, but I know she's still doing them. Opportunity Resource Fund. She was working with some new developments that I was working with earlier this year.
New developments
out in Ypsi. And then I also work with the Housing Commission in Ann Arbor. We were considering working with her to help Section 8 voucher holders turn into
homeowners. Oh, we got to talk offline about that one.
Okay.
Yes, because I have a friend who's who's a member of our board, Greater Detroit Realtors Association, who's working with another city.
I know Renee.
Yeah, Renee too. To work
she
with.
keeps asking me, and I told her.
We need you to come over, Women's Council. You know, she's our second VP of Women's Council. I'm our first VP. We need you to come over and talk about this stuff. This one, the Opportunity Resource Fund, this is my first time here. Maybe I heard it before and it didn't register, but
a lot of times, well, they're here, but they do a lot with programming. So if we have big initiatives or big programming, Christine has been around forever, and she's always going to be involved in like different type of programming where we're trying to do something new or different. That's where she really comes into play, because she's, it's outside the box thinking. Mortgage criteria is a little different, and so she can get people approved that banks can't. So yeah, it's just I'm not sure again what she's doing.
Now, can you use in conjunction with that, with the Opportunity Resource Fund? Can you use that with do they offer down payment assistance programs, or can you use, like, say you qualify for MISHDA or something, can you use these down payment assistance programs with this?
I'm pretty sure you could. I'm not sure.
Okay, we need her to come talk to us about this, and we need you to come over to Women's Council.
Okay.
Look, I just gave you some stuff to do. We do need you though. So when you're helping these small business owners out in Oakland County, how do you find them? And more importantly, how can they find you?
Oh my goodness. So I am every week on Fridays at Incubizo doing Fearless.
Where is that located?
Fearless Financing Fridays. Incubizo is in Ferndale. It is off of 9 Mile. It's right near CVS. I don't know the name of the street, but
is that a restaurant?
It's a co-working space. It is gorgeous. It is it's on two sides of the street. So it's INCUBIZO. Hey Josh. So Incubizo is a co-working space that let me host Fearless Financing Fridays, and there I have small businesses come out that are interested in having their business in Oakland County. Now, Seed Lending does do loans in Wayne, Macomb, Washtenaw, and Oakland. I think 9 counties. So if anybody comes from other counties, that's fine. I can still refer you over. But I was hired by Seed to find loans in Oakland County. So there I have businesses come out. I listen to them tell me their story, storytelling, what's going on with their business, what is it that they need, and I try to help them understand how to reframe it in order for it to be fundable.
Gotcha.
Fundable. Mm-hmm.
Okay. Now, with you guys' loans, how do you issue the funds to them? Because, like, when I did it, what they would do was, if it was something that needed to be taken care of, they would just write the check or monies towards what needed to be.
And that's perfectly fine. We will fund if you get a business strategy, a marketing strategy, we'll pay the strategist. If you have invoices that need to be paid, Seed will pay the invoices.
Okay.
So they do so much in working capital operational funds, so it goes directly to you. But when you think about a small business loan, if you need to borrow $100,000, it'll never be $100,000 in a small business loan directly cash to you. It's gonna be broken up for like operating funds, equipment, inventory, employees, marketing, branding, business development. So there's going to be a certain amounts for all of those. It'll never just be $100,000 cash to you like when you take money out your house, because it's for the business, and the business have all these components that make the business work and increase revenues. So yes, don't worry if I want people to understand that too. Don't be upset or think it's personal when they say, okay, we'll pay your invoices directly instead of giving you the money and you send out the check. It's just a way to lower the risk, to make sure that the payments get made, because these are the things that we see in your business plan or expansion plan that you say with your research that this is going to help me increase my revenue.
Gotcha.
So we'll just pay it directly, or they'll just pay it directly.
Okay. So I have a question about my own situation. My loan will be paid off in full, yay, in October. Would that boost my credit? Will that show on my credit at all?
It depends on if they put it on your credit. Some business loans are on your credit and some are not. I feel like you probably personally guaranteed it, so it probably is on your credit.
Okay, I don't even know. I don't even remember if it is. I know that for collateral, I had to do a life insurance policy and list them on there, but
yeah, talk about that.
Yeah, I had to. A whole life policy.
Did you already have it, or did you get it when you found out you needed it?
Well, I already had it, but I had to add them as an assigner onto the policy. So thank God I did have it. But I was like, oh my goodness. But
this is why we tell people whole life policies. So at the bank, when you see other people coming in to get a loan, they'll have $1 million whole life policy, and that'll be their collateral, and they can get they can borrow a lot of money and leverage that because they have that policy and they've had it for years. So insurance policies can definitely be used as collateral instead of them leaving your home. Again, they can be a signer and they can be on the life insurance whole life policy, and that can be used as collateral.
That's good to know. So I need to check and do my own due diligence to see if that's on my credit report or not.
If you made the payments on time.
I have.
Yeah, so that's okay.
Okay.
It'll be good.
Yeah. Okay, cool. So I want to talk about, so you talked about where you are at Incubizo. Say it one more time.
Incubizo?
Yeah.
Incubizo. It's off a 9 mile between Woodward and, what's the hill? I can't think of the name, so it's off a 9 mile.
It's off a 9 mile, okay. And what time?
8:30 to 10.
8:30 to 10.
Yes.
So, small business owners located in Oakland County can come there and see you and talk about its Financial Friday. What is it?
Fearless Financing.
Fearless Financing.
Friday. Yes.
And so they can come
have a cup
and
of
ask
coffee,
you.
talk about their business. We had 7 businesses yesterday. It was the first Friday. The first Friday that I started hosting it, and probably 5 of them are going to be turned in to get business financing. And and a lot of them expressed they're a little nervous. They've been putting it off. Some of them have had businesses for 20-something years. They've been bootstrapping it that long. They're exhausted, and they just know that they need to go ahead and go to the next level. And so, or some of them have exhausted their funds, invested so much money.
Yep. And you're able to help probably 5 out of 7.
Yes.
That's an awesome percentage.
Yeah.
That's great.
It's when you have the conversation and hear where they are, and then I'm a problem solver, so I'm like, if we set it up this way, it should work. Now I don't know for sure if it's gonna get approved, but I believe it should.
Yeah.
So I'm gonna go ahead and refer them over, and then I hope to meet new businesses this Friday, because we've still got $4 million to lend out.
I may come over there and hang out with you guys just to see the setup. And I love hanging out with other small business owners. Why? Because we all have a story.
Oh, well, you should come also. So I started on Wednesdays. Wednesdays is called 1 Million Cups. And that is an initiative that is countrywide, it's nationwide, it's funded by the Kauffman Foundation. And the idea is that everywhere in this country, at 8:30 in the morning on Wednesdays. Small business owners will be sharing a cup of coffee. So 1 million cups of coffee are being shared every Wednesday morning at 8:30 across the country.
Really?
And business owners are talking to each other about their pain point and getting advice from business owners about how can they solve their issues. So every week a business owner presents what their business is, what it does, and what their pain point is. And then in the audience, we've got scorers there, we've got marketing companies there,
Really?
we've got people from Michigan with workforce development, and everybody would just give their opine on, hey, did you try this, or did you try that, or maybe you should try to go to this company or that. So it's free advice. And it's about 40 business owners, 40 people come every Wednesday morning now at 8:30. It's from 8:30 to 10.
And
so,
where, what location?
Bezo, same.
Oh, it's same place.
This place is what's it called? Share space, workforce, co-working place. And so he's really building his community up. They've been there for a long time, but this is a programming to build up the foot traffic and get businesses to talk and open up a network. And so it's a real good program. And I've been there, but I was like, I can't talk about funding, so that's why I'm branching off of that. And so I created Fearless Financing Fridays. And that's a branch off of the Wednesdays, which is kind of like their pain point.
I'm gonna come have a cup of coffee with you on Wednesday. I'm gonna come out. No,
it's
really.
Every Wednesday at 8:30 in the morning. It's really great.
Why you ain't been telling me about that, Lisa? You ain't even like in the email or text. You didn't even say anything about it. And I'm gonna say,
I said you didn't tell me what we was talking about. I didn't know.
I'm just saying, period. You could be like, come have a cup of coffee. A million cup of coffee. Okay, so that's a good way to segue right into. This time go by so fast. We got like 2 minutes. Can you talk about your social media company?
My social media, The Trusted Banker. I'm on TikTok. 200 and something thousand followers on there. And Instagram, Facebook, YouTube, and LinkedIn. So my social media, what I do there is I have bankable on demand. So I have bankable on demand courses for persons, for people, or for businesses. And so with the tips and tidbits I give out on social media, I try to help you understand, like right now, the post I made last night was about some laws that the Supreme Court just changed that's going to impact how the Equal Credit Opportunity Act is going to be utilized, the FDIC is going to be utilized, HUD is going to be utilized, because now it's not going to be based on the experts at the Department of Housing and Urban Development or at the FDIC. The judges can make decisions because they just removed a overlay that was helping to protect people. So there's discriminatory actions being done in Chicago that was just ruled on yesterday, and the industry, Townstone Financial, said they weren't being discriminatory towards their applicants. They were just doing discriminatory marketing because that's protected under the First Amendment, freedom of speech. And so if we have to pay attention to these things, we have to vote, because this is the Supreme Court that Trump put in these judges in, and they're the ones that remove the protection for the people, so that if this financial institution, they're appealing it, they're saying we can be discriminatory because it's our First Amendment right. But the ECOA says you can't discriminate against anybody. So these are the types of conversations that are going to start happening because of the removal that they put in those protections, because judges can now make the decision versus the administrators of those policies and regulations. And as a community reinvestment officer, that's a regulation that I used to manage. So I look at all regulatory compliance because it affects and impacts your day-to-day life. The protections of all the administrations in the government are what protects the people. And if we don't get the person in there that's going to hire people that are going to protect the people, we're going to have a problem.
We're going to be in trouble.
Yeah.
So how can people contact you?
Okay, you can go on. So I am on social media. So you can follow me on all social media. If you inbox me, I do answer the Instagram one because that's the one that's the easiest. TikTok is not easy. Or I have my website is thetrustedbanker.com, and you'll see on there how to contact me on that page as well. So you can, reach out that way. Or my email is lisa@thetrustedbanker.com. LYSA at thetrustedbanker.com.
Well, it was such a pleasure having you here today. I told you this time goes by super fast, and it was so much more that we could have discussed. Okay, like I'm gonna have to have you come back.
My other stuff, my nonprofit, my conferences I do.
Oh man. Okay, so look, now you got an excuse to come back, Lisa,
Oh,
the trusted baker. Yes, you got to take more time out of a Saturday and come hang out with me. Thank you all.
You are. It's fine with me.
Cool. Well, thank you all for watching Beauty in the D Live, where we stream on Facebook, YouTube, Twitter, and other top social media platforms. Remember to like, follow, share, comment, and subscribe. And thank you for watching Wjzz Cool TV, the coolest station in the world. See you next week.